So you want to know why I chose swing trading? Welcome back, YouTube, to my channel. In today's video, it's going to be about the stock market, and more specifically, it's going to be why I chose swing trading as my style of trading. Let me just start with the definition of what swing trading is. So, by definition, from the website Investopedia, which I highly recommend you check out, it's a website that gives you a bunch of definitions and the rundown of stocks and financial stuff in general. So, quote, swing trading is a style of trading that attempts to capture gains in the stock market or any financial instrument over a period of a few days to several weeks, which swing traders primarily use technical analysis to look for trading opportunities. These traders may utilize fundamental analysis in addition to analyzing price trends and patterns, end quote. I know it's a lot to take in right now. However, I'm going to try to break it down for you. In a stock, in a finance, think of TD Ameritrade, Thinkorswim. There's indicators in that helps you decide, if it's a good time to buy, hold, or sell a stock. What I've noticed is that, for me at least, this type of trading is more laid back compared to day trading, which is kind of why I chose swing trading in the first place. I'm a college student, as you might have seen in one of my videos, is that, I go to school. And as many of you guys can guess, being a student is very time-consuming, leaving me with very little time to actually do other things that are not school-related. So with swing trading, I tend to watch the market open, which is 9:30 to 10 a.m. Eastern Standard Time, and usually the closing hour, which is 3 to 4 Eastern Standard Time. In that time, I'm just making sure nothing too crazy happens. What's nice about swing trading is that everything is a longer position. So when it said in the definition, positions are several days to a couple weeks, my positions are usually several weeks to maybe a month and a half, never anything way more than that. Which is super nice because it gives you more leeway on your stop loss points and everything. It's just way more, how do you say? It's easier to manage. It's not something that you have to be worried about nitpick by the numbers. So I'm going to demonstrate right now on a stock that I think is, has held a great consolidation pattern. And then I could probably move it on to a couple that I think are also good. But first up, we have ticker symbol ALLO. I've said this one in a couple of my other videos, but just looking at it, we can look at it. Since IPO, it's been in a consolidation pattern. Really, what that means is the people of the stock don't really know if they want to go up or down. So when it IPO'd, it started at 2167. Okay, then it went up and then back down pretty close to 2167. Then went all the way up to 3555. And that's been the all-time high of the lifetime of the stock. Since then, it's been winding down, going down, up, down, up, down, up, down, to the point where you can draw lines where it's like a wedge. Think of a wedge going to stop a door. Now, what I do, swing traders, will try to pick it up at the support, which is actually pretty easy if you think about it. You just got to time it right. Unless you miss out and then it breaks the trend, or you miss out and it makes a big move up or down, then no big deal. But because there's going to be thousands of trades a year that you could possibly get, and you're not going to get all of them. You don't want to get all of them. That's too much. You're a swing trader. Make it simple, stupid. Make it stupid, simple. Whatever you want. So looking back at this, I've actually had to readjust my lines on ALLO probably twice. Now, I wouldn't change it again because it really did break out. So the thing is that for consolidation, you're waiting for the stock to get so quiet that it only has the only option is to make an explosive move up or down. See, what happened here is that it touched that support one more time and then exploded out of the range, okay? And then the next 3 to 4 days were red. Huge red days, and now it's consolidating again. So this is a stock that I thought it was pretty easy to read. Everybody could read this one. However, I got a couple more to look at. So we could look at ticker symbol BILI, BILI, BILI. Now, while looking at BILI, I would zoom in a little bit more. It's consolidating, and it first touched around, I'd say the first point of this consolidation pattern is 1331, and then the highest point is 16.7-ish. Okay, that's the best part about swing trading. You don't have to be exact. It's not necessarily that important. Okay, so it went from 13 whatever, what I said before, and moved all the way up till 1684. Then now it works inside the range, and it quiets down. And you can draw your trend lines, and you can see that it's going to get tighter and tighter and tighter, and you can kind of guess when it's going to break out of the range. You can make an educated guess when it's going to break out. Now, the other job as a swing trader is you're supposed to be able to tell by what my indicator is the volume profile for a Thinkorswim, and that's basically showing you where the price control, where the most amount of people, most actionable is during this time. I can make a separate video on that. So right now, swing trading, I'd want to catch it down at support, which right now the day is October 3rd. This is an hour and a half after market close. And now I wouldn't want to hop into it now, but honestly, it wouldn't have been a bad spot during the day. I actually thought about it, but wouldn't have been a bad spot. I got into it on a paper trade. Other than that, I'm waiting to switch my funds into Thinkorswim. All right. So it's at a good spot. You're waiting for it to get super tight and then explode. And that's basically, it's going to take probably a month to do that if you bought in right now. So that's where swing trading comes in. I could probably lay back and do exactly what I said. Look at it in the morning and look at it at close. Another stock that I wanted to bring up is GDDY, GoDaddy. Now this is also, you know what? Let's whip it up here. 5-year monthly, I guess. If you look at the monthly, it looks super nice. You probably have 1, 2, 3, 4, 5. It's kind of this one's going to take a while. This GoDaddy seems to be, we found it really early. You could look back at the yearly. It's got some time before the trend lines show that it's going to really get tight. So, but yeah, this is definitely a position you could take to minimize your risk. Really, though, that's the whole point. And if you want to minimize your risk, you'd buy at the support. You'd wait for it to break out of the range, or if that, you just go to the next low. If it breaks down, you'd stop out at the last support. So, that's basically a rundown of how swing trading goes. If you want, leave a comment down below, and I can definitely make another video explaining exactly what you want to know on swing trading a little bit better. But other than that, this was just a little introduction video. And yeah. All right, I hope you guys enjoyed this video. If you liked it, please give me a thumbs up or leave a comment in the comment section down below. Other than that, I don't have anything else for you guys in this one, so I'll catch you guys in the next one. Peace.